Someone asked me, what is the confidence that we have that the government of Uganda will be in a position to pay off the treasury bonds or the debt obligations they have, especially when it comes to the treasury bonds. Ng'agezaako okugamba ddala tebatukubireyo oba if you are a person who is trying to put in just 10 million, what are the chances that the government might struggle to pay you? And for me, it goes back to the people who hold the biggest treasury bonds. Like I know for you and I who are retail investors, we are just the small cog in a big machine of treasury bonds. And it always brings me back to the annual statistical bulletin for the debt for the Uganda to understand which population, which group of companies own the biggest debt for the government. Naawe esobola okuwa obugumu obugamba nti no, okay, for as long as company A or company B, they are heavily invested in this particular product, maybe even I personally I can follow their route. And that brings me to this. So one of the things we're going to talk about is just this particular graph. This is a graph which shows the holders of the government securities, and this means both treasury bonds and the treasury bills between the financial year 2023 and the 2024. And now the numbers have changed, and by the end of this financial year, the numbers will look different. But this is the starting position of what you have to understand as you, as a retail investor, on what you might have to do. And when you look at here, the biggest holders are the commercial banks. And when we talk about commercial banks, we are talking about the biggest tier one banks and maybe tier two banks, Stanbic Bank, DFCU Bank, Housing Finance Bank, Bank of Baroda, NCBA, name all of them. They hold significant amount of treasury bonds and treasury bills. Actually, most banks own mostly treasury bills and short to medium term treasury bonds because most of them they want their money to be coming in more often. They are almost targeting the liquidity flow, but they have understood that the treasury bonds make money. In another video one day, I will show you how they are shifting away from lending to the private sector to more lending to the government sector because it makes them money. They have understood how the risk is, and the risk of default, they know it's somehow limited to a certain level. But if banks are investing in treasury bonds and treasury bills, that should give you the confidence. Now gamba nange mbutuufu bebanga. Either way, if you have listening to this video and you have 1 million in a bank account, chances are that 1 million is already invested in the treasury bond through the bank. So if the banks are using your money to invest in the treasury bond, why not you? And it's a question of that always. Like if the bank, this bank, they are always using deposits from customers, from you and I, to either lend it out to the private sector or to lend it out to the government. So now that is one. The second one is the pension and the provident funds. The pensions and provident funds, that is NSSF, that is the Octagon, but let's focus mostly on NSSF. How many of us have NSSF savings? And we trust that NSSF is one of the most well run organizations. And we trust that in 20 years from now, when I retire, I'll go to NSSF and they'll give me my money. Where do you think NSSF is investing that money for it to declare a 10, 11% interest that is lucrative every single year? Of course, almost 70% of their investments is in fixed income. And fixed income means treasury bonds, both for Uganda, Kenya, and other regional countries. And also other provident funds, other and pension funds, the way that are regulated by the Uganda regulatory, the pension fund, and the and all those that are regulated by the pension regulator. So they are heavily invested in treasury bonds, and that's the global business. The global business of treasury, of pension funds. They mostly invest in fixed incomes because they do not want, their biggest goal is not to lose savers' money. So they don't want to take certain risks. And the good thing when it comes to Uganda, where they are investing in, they are investing mostly in things that are bringing in a little bit more money. And they own, in 2024 they own around 30% of the government treasury securities, while the banks held around 35.5%. Then the next one, which people might be interested in, is Bank of Uganda. Yes, Bank of Uganda as an entity owns treasury bonds. Why? Because it's an independent entity away from the government. They are allowed to trade. Whereas, yes, they help, they are the bank of the government. As an entity on its own, it also invests in treasury bonds. And you, by last year, where they were paid, beginning of this financial year, where they were paid close to 70 trillion in their debt through getting treasury paper, this number will go high. We shall see what the report will show in the current year. Then you have other financial institutions, those are the credit institutions, the MDIs. You have insurance entities. Then you have offshore people, offshore companies, the global entities. One thing you will notice that the Ugandan government treasury bonds are part of certain certain ETF indices on the London exchange market. We shall talk about those later. But then you come to the retail investors, where right now by June they held close to 2.27 at cost of the treasury bonds, and it's increasing, treasury bonds and treasury bills. Retail investors, it's where you and I fall into. So if you are trying to understand where to put your money, if you're trying to understand what is the confidence for me and you to invest in, will the government pay us? The fact that almost all the big financial players are heavily invested in treasury bonds, it should give you the confidence that the government understands to default on Kakande is to default on all the commercial banks and the pension funds. And if you're to default on Kakande, you are literally saying, I'm also defaulting on the NSSF. But what is the real implication of you defaulting on NSSF? It means you are making NSSF insolvent for it not to pay its savers, and the government cannot take that decision. It understands, and the people at the Bank of Uganda that are highly qualified, and the people at the Treasury office in the Ministry of Finance, highly qualified to, and to know how to manage the monetary policy and the treasury bonds and treasury bills policies. They understand the implications of you not paying NSSF its coupon income or its redemptions payments. Think about banks. You potentially have your deposits in a bank of, let's say, 10 million. What makes you think that if government is to default to pay the banks their money, that bank will have no money to pay you? You know. So when you think about that whole system and how it's intertwined, the government, the people at the Bank of Uganda, and the Treasury Office at Minister of Finance who run the Treasury, the Government Securities Office, they truly understand, and they always try to make sure that payments are paid in the right time. Every person is paid, and that should give you the starting confidence and the trust in the system, that if the big players trust that they will be paid, even you of the 10 million, you will be paid your income and you'll be paid your capital when the time comes. So when you understand, it's not to say that okay, they are the protectors of your investment, but when the big, sometimes when you cannot think so fast, you might as well just follow the big players. Then they might at one point make you reach where you want to reach. It's like where they say a hyena doesn't hunt for itself, it follows the lion. And for whatever the lion hunts and eats and leaves something on behind, the hyena also gets part of that. That is the same thing with this. Now, for us, you and I, we might be the hyenas. We do not have the energy, the effort to hunt for ourselves in the jungle. But the banks and the pension entities and the insurance entities, They are the lions. Let them go hunt. Now they are hunting in the treasury bonds, they are hunting in the treasury bills. We can hunt with them, then we can follow, they can hunt. Whatever they leave out is what we take as retail investors.